In the transportation industry, trust is currency. Carriers must rely on freight brokers not only to connect them with reliable shippers, but to pay them on time for services rendered. With rising operational costs and ongoing risks of fraud, carriers have become more selective than ever in who they choose to work with. One of the first places they turn to when evaluating a broker? The broker's credit report. Now, whether you're a new brokerage trying to establish relationships or a seasoned operation looking to grow your carrier network, understanding what carriers look for in your credit profile can mean the difference between consistent coverage and missed opportunities. In this video, we'll explore the key credit report elements carriers focus on, how these factors influence their decisions, and what you can do to maintain a broker profile that gives carriers confidence. We'll start by diving into why credit reports matter to carriers. Carriers operate on tight margins. They need assurance that the brokers they work with are financially stable and will pay quickly and consistently. Since most carriers don't have the resources to chase down late payments or fight disputes, they rely on third-party credit data to assess risk in advance. This is where credit reports come in. A broker's credit profile gives carriers a snapshot of payment behavior, financial responsibility, and industry reputation. It's a tool that helps them say yes or no to accepting a load, and even determines what payment terms they're willing to offer. Credit agencies like TransCredit, which specialize in the transportation sector, play a key role in providing these insights to carriers, factoring firms, and load boards. A strong credit report not only helps secure carrier trust, it can also reduce the cost of doing business. Let's look at some key elements carriers evaluate in a broker's credit report. First, transportation risk score. Now, this is a numerical rating that reflects a broker's financial risk level based on reported payment history, references, claims, and industry data. Most carriers have internal thresholds for risk scores. If a broker falls below that line, they may decline the load altogether or require prepayment. While companies have different thresholds, generally carriers and factoring firms want to see a broker's credit score at 80 or above to even consider working with them. 2. Days to pay or DTP trend. This metric shows how long it typically takes a broker to pay carriers. A DTP under 30 days is generally favorable. If the trend is rising or has spiked recently, it can raise red flags for cash flow issues or internal operational problems. 3. Reported payment experiences. Carriers look at how many positive and negative references have been reported by other transportation companies. The more current and consistent the data, the better. Lack of recent payment data can suggest inactivity, lack of transparency, or that the broker is too new to evaluate. 4. Claims or disputes. Any history of unresolved claims, payment disputes, or deductions will weigh heavily on a carrier's decision-making. Even a few derogatory entries can cause concern, especially if they appear recent or involve amounts that suggest negligence. 5. Business longevity and reporting activity. Carriers are more likely to trust brokers with a longer operational history and an active reporting profile. A credit report that shows consistent activity over time gives them a clearer picture of stability and performance. 6. Verified company information. Basic details like MC and DOT number, years in business, and business address should be up to date and verifiable. Inconsistencies here can lead carriers to question legitimacy, particularly with rising concerns over broker identity fraud. Now let's look at how carriers use credit reports to make decisions. When a load becomes available, especially one with tight delivery windows, carriers don't have hours to vet a broker. They want to check a credit report, scan for red flags, and make a decision fast. Some carriers use load boards or factoring companies that provide integrated credit tools powered by data providers like TransCredit. others run their own internal due diligence based on experience and credit ratings. Either way, your credit report becomes your calling card. Here's how it plays out in practice. Green light, a solid credit score, low days to pay, and multiple recent positive references signal a trustworthy partner. The carrier accepts the load and may offer net terms. Yellow light. A few inconsistencies, aging references, or slower payment trends raise concerns. The carrier may request upfront payment, decline to haul, or escalate to management. Red light. A poor score, unresolved claims, or lack of data altogether results in a hard pass. The carrier won't risk the load even if the rate is favorable. Now, you may ask, why should you care as a broker? If you're not actively managing your credit profile, you may be losing access to quality carriers without even realizing it. The best carriers, those with newer equipment, reliable service, and experienced drivers, have plenty of options. They won't gamble on a broker with questionable credit. What's more, your credit profile doesn't just affect whether a carrier accepts a load, it can influence multiple facets, such as rates, because carriers may charge more to offset perceived risk. Terms, because you may be asked to pay upfront rather than get 15 or 30-day terms. And reputation, because word spreads fast in the transportation community. A negative report can result in fewer inbound calls and reduced capacity options. For brokers working in today's competitive market, your credit profile is as important as your sales pitch. Let's now look at improving your credit profile, a strategic advantage. If your credit report isn't where it needs to be, there are steps you can take to strengthen it. First, submit carrier references. If you pay carriers on time, make sure it gets documented. Agencies like TransCredit allow brokers to submit carrier names and contact details so those payment experiences can be verified and added to your report. 2. Resolve any outstanding claims. Clear up unresolved disputes or derogatory claims. Carriers and shippers will look at how you handle conflict as much as whether it exists. 3. Stay active and transparent. Make sure your company profile is current and that recent payment data is being reported. Inactivity often appears riskier than a less than perfect history. 4. Monitor your report regularly. Don't wait for a carrier to tell you there's a problem. Proactive credit monitoring allows you to catch issues early, submit corrections, and make strategic improvements. And 5. Enroll in a credit management program. Services like those offered by TransCredit give brokers tools to build, monitor, and protect their credit standing. These programs are particularly useful for new brokerages looking to establish credibility quickly, or for established brokers trying to maintain a competitive edge. Some final thoughts. Your credit report is more than a formality. It's a vital part of your brokerage's business development and relationship building strategy. In an industry built on reliability, your credit profile tells carriers whether they can count on you to do what you say when you say you'll do it. The next time a carrier looks you up before accepting a load, make sure what they find reflects your professionalism, payment integrity, and industry reputation. Because in freight, trust travels fast, and a strong credit report helps ensure it travels in your direction. With the support of transportation-focused credit partners like TransCredit, brokers have the tools they need to put their best foot forward and keep freight moving smoothly. As always, we thank you for watching and hope you continue to find useful information to help with your day-to-day operations. Remember, TransCredit is here to help, so visit our website at www.transcredit.com to explore what we can do for you. And don't forget to like, comment, and subscribe to our YouTube channel @TransCredit. We'll see you on the next one.